All right. Good evening, everybody. Welcome to this is another episode of Wealthy Ways. I think this is the kids edition.
Yeah.
The kids of late edition. That's what this is. I got the spoil one miles right here.
Daycare after dark.
You definitely take care of the dark. You know, this is great because my wife, gets off work at 10 o'clock. So it's been a struggle. So
Gotta do what you gotta do.
I think I told you last week, man. I was thinking about just trying to go away for a while, just when I have to.
To another island.
Yeah, to Antigua, but my wife, she didn't go for the whole year. I did. She gonna, but
I have guests.
I mean, she can't fathom the idea of being without a job, and so I'm like, we'll figure it out. I'm talking about, listen, I'll bring down a water ice machine. I'll be the water ice man in Antigua. I bring, I bring down.
Renting and stuff like that on the beach.
Yeah. So listen, I'll figure it out. I'll figure it out. I start doing tours.
Right.
I one way or another, we're not gonna starve. So, but I did convince her to go for a month though. So
Oh, that's good.
yeah, I know, but didn't realize that my wife's passport and my son's passport both expired.
Wow.
They expire within 6
Within
months.
6 months, yeah.
Right. So they got to get it renewed. So we finally did. We applied the other day. Yesterday we had submitted everything. So once it comes back, and I was thinking about the Caymans, but the Caymans is super expensive. The Caymans is like very expensive, but Antigua not so bad.
Okay.
But yeah, that's enough hope. Like I said, hopefully, man, we could do a couple of these. I'll be on the island. That'd be nice. I'm gonna do a whole bunch of motivational speech
Video. Yeah, you can work from anywhere in the world. Don't you want to work in front of a beach like this?
You gotta see what you have to do is your lifestyle. All the hand motions, always like the hand motions. All right, so yeah, give people a minute. Hopefully, people are watching on Facebook and whatnot. But one of the reasons I wanted to bring Bakama on is Bakama is a tax accountant, right? Bakama, how long have you been doing that? Been a tax accountant?
I've been doing that for a little over 2 years.
For 2 years, okay. So
no, 10, a little over 10 years.
Oh, 10 years. Oh, okay.
Yeah.
Oh, you get busy, so you know it. So, like, one of the things is I didn't want to wait to do this episode until it's tax time. Like, give people, some time to plan. Like, I'm notorious for being like late on my taxes. I just submitted my taxes for 19 on October the 13th, right before the extended deadline. Right before I just put my taxes in. So I'm notoriously, I'm like a last minute extension filer every year. So but I did want to. I know it's going to be different this year because of COVID. So I wanted to kind of talk about that to give people some advice and how to prepare for it. So, Bakama, you got anything to tell us about that?
Yeah. So let's see. Where can we start? Like, first of all, taxes. I guess what I'm going to focus on, like, more of a small business taxpayer, right? So, a sole proprietor or someone like with a single member LLC is just you running everything. So usually in these cases, like your business income and expenses will just get reported on your personal return. You don't have like a separate business return to file. That's the approach that I'm taking. So I don't know how it works with questions, but if anyone, like if you have in the past, that you filed a separate business return. If you have questions, then feel free to ask them. And of course, I can answer the questions for you. So typically, your tax return is due April 15th. And the IRS allows you to get a 6-month extension, and that extends it into October. So Malik said, like, he filed his October 13th. My favorite type of client, the October 13th client. You get like you get the 6-month extension until October. But that extension is an extension of time to file, not an extension of time to pay. So you're still required by law to pay in whatever is due on April 15th. What we typically do is like we tell our clients to get us as much information that you can get us, and we can calculate an estimate of what taxes that you owe, and we would send you an extension voucher so you can pay that in. So the due dates that you want to keep in mind is April 15th, and if you're extended, then October 15th. If you are a small business owner, you would typically report your business income and expenses on Schedule C. So if you owe rental properties, then that will get reported on your Schedule E. So 2 different schedules: Schedule C for small businesses and Schedule E if you have any income coming from real estate, whether it's a rental property or royalty income. All of that is reported on Schedule E. So to get ready, you have a question?
Yeah, I want to know if you go on extension, you get a late fee basically.
If you go on extension and you don't pay your tax on time, they can assess interest and penalties for late filing. Yes.
Okay. All right.
For not for late filing, for late payment. I'm sorry, for late payment. If you pay what is due in October versus in April, they will assess interest and penalties for late payment filing.
Okay, gotcha.
Okay. So what you want to do is like you want to gather up all your income and all your expenses. So first, let's talk about income. Typically, when it comes to income, it depends on what your platform is like or how you get your income. I don't know. Different people have different ways. Some people are just simply cash. They might use like a Cash App or Venmo or Zelle, whatever, to get their revenue from their clients or their customers. Some people have online platforms, like they might be on Shopify or Wix or whatever the case may be. And some people just simply operate with cash. You are required to report all income that you receive, whether it's $5 cash or whatever you receive from your Shopify platform. Like everything has to be reported. When you use like a third party, typically they will send you a form at the end of the year to let you know how much you made. Sometimes you can also usually look it up on the website, like on the platform that you use. I know on Shopify, you can pull up your revenue for the year and different expenses as well that you incurred through Shopify. They have reports to give that to you, but they are also required to issue what is called a 1099-K that reflects the income that you earn through credit card payments. So if you have some sort of online platform, you receive payments through like a credit card. Hold on one second. You receive payments through credit card through credit card companies, and the 1099-K will let you know how much you earned. Sometimes you also receive what is called 1099 miscellaneous, sometimes it's simply referred to as a 1099. If you receive a 1099, you want to make sure that is absolutely reported on your tax return, because if you received it, the IRS also has a copy, and they're going to be looking for that on your tax return. So some people report all their income. I don't recommend that because they have like a system where they match everything. So they're looking specific for every 1099 that was issued to you. They have a copy and they will check, and a notice can automatically get generated, and it's called like a matching notice. Like if something is not matching, and they'll automatically send you a notice letting you know that we expected to see $100,000 of income on your tax return. We only see 60. You're missing 40. So you want to make sure that you gather all your 1099s, and typically that is required to get sent to you. I believe it's January 31st that you should receive it, your 1099. Sometimes people take a little longer with it, but you want to make sure that you receive all of your 1099s and you report all of your income. And you want to make sure that you keep track of your cash receipts as well, so you can report that as well. So I don't know if there's questions about that. Okay,
Yeah,
so next,
yeah.
what
What
you
I
say,
was saying
Malik?
is
Sorry.
I was just letting people that are watching know if they have any questions, you can please feel free to type in the chat, and we'll be able to get them answered. That's it.
Okay, so that was the income on the Schedule C, which is like if you have a rental property. It all depends again on how you set up your rental properties. Some people manage their properties themselves, so I don't know how you collect your rents. If you use a third party platform, or if if people who rent from you, if they just cut you a check, I'm not sure how you do that, but you want to keep track of that because you want to report that. There's some people who use a management company. The management company would also issue a 1099 to you in some cases. Sometimes they do, sometimes they don't. It all depends. But you want to keep track of the rental income of each property because on the Schedule E is reported separately. So that's the income part. When it comes to expenses, going back to business expenses on the Schedule C, if you own a business, we're not talking about rental expenses. Mama business. When you want the biggest expense usually is cost of sales. So like if you're selling some sort of product, there's a cost associated with it. So let's say like you're selling clothes. Like in order for you to sell clothes to someone, you have to purchase the clothes, right? So you have to purchase the inventory. So that's your cost of sales. So that's like usually like the biggest expense, your cost of sales. And you want to keep track of what you purchase throughout the year. And you want to also know what you have on hand as of 12/31, right? So if you spent $100,000 purchasing product to sell to your clients, and at 12/31 you have $50,000 of product left, then you can only deduct $50,000. Like you can't take that full $100,000. So it's important that you know what you have on hand at December 31st. 12/31. Mama, s'il vous plaît, on interview my friend. I'm sorry, you guys. Hold on 1 second.
Yeah, but
Sorry, you guys. She got a little.
That's okay.
Yeah. I wanted to ask.
Did you have a question? I'm sorry.
Yeah, no, that's okay. I wanted to know which one are you deducting? The amount you have on hand or the amount that you sold?
Difference between. No, you're deducting what you sold.
Oh, okay.
Deducting what you have on hand from what you purchased throughout the year.
Okay.
Or if you track of what you sold.
All right. So now
so that's how you keep track of, well that's like usually big sales. Yeah, go ahead. I'm sorry.
No, it's okay. So I'm saying, so with somebody like me, right? I have multiple LLCs, right, for different properties. Like for my flip business, there's an LLC, and then I was putting different rental properties in LLCs, and then I did do a couple of transactions this year with two different partnership groups. So I had to do corporate LLCs, for those. But I think what I personally, I didn't even know that I had to do a separate tax return for each of those businesses. I thought I could just do it like all.
Hold on, Malik. I don't know why, but it's going in and out.
It's going in and out. Do you think that's me?
Sorry, can you say that again? It's going in and out for some reason.
I think it might be on your end, Pukama, because sometimes that was happening when you were talking.
Oh, okay. Then it might be me then.
Okay.
Hold on. All right, can you say it again, Malik?
No, what I was saying is I have multiple LLCs. I have an LLC for my flipping business, and I have an LLC for different rental properties, right? And what I always was unclear on is it better to keep my rentals all under the same LLC or to do a different LLC for each rental property?
I think for tax purposes, it doesn't matter. I feel like people usually separate it for liability purposes, but for tax purposes, it really doesn't matter. Honestly, like keeping it all in one LLC is cheaper for tax purposes because then you don't have as much compliance work to worry about on the tax side. It really doesn't matter.
Okay.
Yeah, it's really on the liability side that we usually recommend that you keep them separate. And that's the liability is the major issue.
Yeah, I got at Lindsay, right, to see if I could get like a umbrella insurance policy or something. I mean, I have both. I mean, my very first properties I still have in my name. I haven't even changed them out, and put them in an LLC. Yeah, my very first couple will still have my name on it. So I do want to change those. Speak of the devil. Let's speak of the devil. I would just.
I'm at my brother's basketball practice, so I'm putting it on mute. I'm gonna step out in a second.
You must have heard me say your name just now.
Wait, can you guys hear me good with the headphones?
No, we
We
don't
can
hear
hear
you.
you.
We can hear you,
You
but it
can?
ain't with that good. What is that?
It's not good?
No, we can hear you.
We can hear you.
Okay.
We
All
can hear your
right.
background too.
No,
All
listen,
right. Let me.
I just put your name up, right? Because so I was asking for Kama about my rental properties, right? And having them in different LLCs versus having them all grouped to one. And what they were saying, it doesn't really matter for tax purposes. So I wanted to find out for liability's sake, like what could I do to protect myself if I did want to keep them in the same LLC?
Well, I don't do property and casualty, but
Oh, okay. I
I'm
got you.
a little bit familiar with it because I work closely with the PNC broker, and really the bottom line with the liability has to do with like if a tenant was to sue you and you have a bunch of properties in the LLC, then everything that's under that LLC, to my understanding, is liable under the suit. Like
Yeah.
as far as what you have. So usually they say to keep them separate. So if you have an issue with one property, it doesn't affect all the properties that you have.
Right, that
Yeah.
makes
And
sense.
even judgments, they could show up, judgments and like sort of like municipal issues could possibly show up on other properties. I've seen it, with real estate deals. Like if somebody has more than one property, something that belongs to one property might show up on the other one, and it causes just some annoyance. So, you know, but Lindsay, I think he was trying to see if there's some sort of umbrella policy, if that would, or to what extent that would help.
So as far as the umbrella policy, there is a policy that actually covers any like lawsuits or liability that you have in PNC. You could pay for that in extra coverage, right? And you can get it for up to a certain amount. The thing about that is same thing with car insurance. If the person is suing you for more than what you have in that umbrella policy, then they still can kind of come at you personally, So that's why you kind of want to just make sure, even if you buy the extra coverage, you want to make sure that you kind of keep the property separate for that liability purpose. Um, so all of those properties, all the money you're making for all of those is really not caught up in that situation.
Yeah, that's what I mean. That's what I usually say too. Insurance is great and wonderful, and we definitely need it for almost every area of our life, right? But you also want to layer on your protection by having the property separate and having your insurance, because insurance is not foolproof. because there are exclusions and there are certain things that you could be doing to violate your policy. And if that's the case, then perhaps, either you don't have enough coverage or maybe it won't work. That's not to say you don't need it. You do need it and you should have it. But if you want to be as cautious as can be, that will be to keep them separate.
All right.
Yeah, I totally agree with you, Sabine. You want to do as much things as you can to protect. So I bought the umbrella coverage for my properties. I actually have the extra coverage for like if they sue me, to just make sure that I can keep it as far as possible away from my personal assets.
Yeah.
But doesn't the LLC kind of protects you from them going after you personally?
So, I mean, not if the person then comes after me personally, like if they file a civil suit on me, saying, as an individual, they still can attempt to do it. It doesn't necessarily mean they'll win or not, but that's like with car insurance. Your policy is protecting you up until a certain amount, and after that amount is done, the other person can say, well, I'm not going to go after them because I might not get anything, right? Because I just had a car accident when I messed my knee up, and they basically were like, this person only has $100,000 in coverage. That's all we can give you. If you want more, you got to sue them personally.
Okay.
So I'm sure with the LLC, I'm sure, if the person came at me personally, they can attempt to. I don't know that they would win, but I just don't want to be in a position where they didn't get enough money from the policy that I had covering the house in the first place.
Yeah. So I thank you for that. Now, but let's ask you this, right? So how are people handling the PPP loans and the EIDL for the taxes, and even unemployment with the extra bonus?
So when it comes to like the unemployment, like that, like they usually just take out taxes like off the top. Well, I'm in New Jersey, so like in Jersey, like they take out federal tax withholding when it comes to unemployment. So of course that's going to drive your income up, especially I think it was like, well, I don't know. It can affect your income, especially with that extra $600 a week. So it can potentially move your tax bracket. So that's something that people need to keep in mind. Like your tax bracket may change if your income increases significantly enough. But when it comes to the PPP loans, there's still like Congress is still trying to clarify one portion of it. The original purpose of that was that you get the loan that will allow you to pay expenses that needed to be paid, particularly wages to your employees, and then you're able to get a forgiveness on the loan, and you're also should be able to deduct the expenses. So there are certain requirements in order to be approved for the loan forgiveness, you have to use the proceeds from the loan for specific expenses. And right now, the way the law is written, you can't deduct those expenses. So like if you received a loan for $40,000 and you spent all of that on rent and on employee wages, which are part of the requirements, there's like other allowed expenses that you can use. But if say you use the entire $40,000 on that, typically the way that Congress originally wanted the law to work, you would still be able to receive loan forgiveness. Now, if you're not aware, typically if you owe anyone money and that loan or that debt is canceled, you have to pick that up as income and pay taxes on it, right? Wow. But what they're saying is that you don't have to pay taxes on it. It's not taxable income. So once that $40,000 is forgiven, you don't have to pay taxes on it, but you can't deduct that either. So originally it was written with the idea, the purpose of it was for you to be able to deduct the wages and the rent that you paid and to also not pick it up in income. But right now, we're telling our clients at my firm, don't deduct the expenses. You can't deduct it. But you don't have to pick it up in income either. So they want you to be able to like double dip because, COVID-19 hit everyone pretty hard, but they made a mistake when they were writing the law and it hasn't been corrected yet. So I hope that answers the question.
Malik, you're muted.
Oh, I think
No. What I was saying is, no, it did.
no, we
but
heard you,
got-
Fakama. It was Malik who was muted.
That was me. I was saying, did you see the video, the rap video, of the dude using the EIDL loan?
No, that was for real or was it a parody?
Oh no, it was real. It was real. He did a real rap video
Yeah.
and talking about the EIDL loan and like so he's spending all this money. And one of the lines in the song was saying, I think like to get a mill, say you got to sell cocaine. All I got to do is file a claim.
I can't.
They came like just messed up, right? So, but no, so yeah, he put in a song. That he's using the EIDL money for his rap career. Listen, but it's a real business though, right? I mean, that's a real business. I don't see how they differentiate that business from another business, right? Is if he spent it in furthering his music career, I think that's fair spending.
I mean, yeah. I mean, if it was set up and it was requested under that pretense, then sure.
Yeah, but we don't know. I mean, I think
no, the details.
I think the right attorney could at least keep him out of. He might got to pay the money back, but he might at least be able to stay out of jail. I think it's gonna be a lot of people going to jail.
I don't think the government likes to be mocked. I think that's the thing. Like they were like coming after people right away with the foolishness, and I think it's because it was just like, come on, like really.
Yeah, but it was foolishness. I mean, it was spending real crazy. Like, the bull. How you buy rape cash? Like, come on, man. That's not even. You can't do that kind of stuff. You can't just go in there.
People always take things to the extreme. Every time it's something. Every time you get a little bit, they go freaking wild. So it's hard because for the people who really needed it for business, I know a lot of people who didn't get the. A good amount in the PPP and they really needed it, right? And then you had people who was out here who didn't even have a business that barely was open, but they had a bank account and they were getting $250,000, $350,000, and you have people really who had businesses who didn't get that money. So, it's because of all of that kind of stuff that the people who needed it didn't get it. It's sad, but that's how it happened.
I mean, if only they would have used that money to stimulate our economy, the colored economy, the black people economy, we would have been okay. But
no, they brought cars and bags. That's what happened.
Yeah.
I mean, listen, the summer, man, they had a great summer. They just couldn't travel nowhere, man, but they had a really good summer. But so, I mean, I think that even right now, right, I'm looking at it. Imagine they would have bought like one of the Tesla semi trucks, the automatic. They like $250, whatever, automatic, the self-driving ones. But if you got $1 million or $2 million, you buy one of those, you can drive your truck all day and all night. Put a driver in there, let that thing run. It's a real business. But I don't know. I didn't get anything. I actually applied. I got denied for mine for my construction business. I mean, I was for that, and they said I didn't. The business that I was in didn't qualify for the EIDL. And I could get the PPP loan.
You're not started today.
I ended up. Yeah, everybody is. But no.
I'm going to go wake Cooper up.
Yeah. So, but no, I definitely didn't. I definitely didn't get it though. But like I said, I didn't take the PPP loan. For that. But
yeah.
I kind of feel like I should have, but I got the reason I didn't, right? Because I took unemployment for a couple of months, like right at the beginning of COVID. I took unemployment, so I didn't want to take the unemployment and then also take a PPP loan as self-employed income. I didn't want to do both, so I just took the unemployment.
How do you get unemployment? I had a friend who paid unemployment and they made her pay it back.
Really?
They made her pay it back when she started working.
As a
Wow.
no. I only took it.
I don't understand the unemployment thing. I don't know.
Oh no. I mean, I took it as I wasn't able to work, right? So I took it as a realtor. But when I started closing deals again, I stopped filing. I didn't keep filing, but people are still filing, even though they're closing deals. I didn't do that because I'm not playing with the government money. I'm not.
Because they want it back.
Yeah, no, I'm not playing with
Find
people's
out
money.
who was broken.
No. That's the last thing I need.
Exactly.
People.
That's why I didn't do it, because we slowed down for a couple of weeks and I contemplated it. But being a lawyer too, if they feel like that's fraud, they'll just take my license, and so
Wow.
it wasn't worth it.
Yeah. From my understanding, when you owe them, you automatically go on probation until you pay them back.
That's what happened to her. She couldn't even start her unemployment until she paid it back for the last unemployment. I was like, that joint is a scam.
Yeah, no, I chill. Like I said, I didn't try to double dip. I took I was like, PPP loan, unemployment, which is free. So I took the unemployment. I was like, I'm gonna rock out with that. We're not gonna do the PPP loan. And so, but I did that for like 2 months. I got like 2 months of unemployment, and the first month I really didn't do anything, but the next month I tried to at least start getting busy, try to figure out how to make money for the months coming up, and it ended up working out, but yeah, I didn't. But I know other people, they just kept filing.
Yeah, did you get one of those 60,000 lump sums?
No. My lump sum was like 5,400.
Okay.
They were doing that, giving lump sums?
Because so it was a lump sum because it was back. It was the initially.
By the time it came.
So by the time at first they said realtors couldn't do it, but then when they said realtors could do it, they allowed it for back money. But I felt like I cheated myself because after you file, they said you could go back to February, and I only did it to like mid-March. I'm like, damn, I lost like 6 weeks. So I could have had that back.
They find out. So you did it right.
Yeah. So exactly. So I took my little couple dollars, to help my lifestyle out, but it still panned out for me because I couldn't sell no houses. I was, this is going to be my lowest earning year, man, probably in half a decade. This year has not really been great for me financially. I learned a lot. I would say I learned a lot. I'm gonna have more money going forward, but thus far, it really hasn't been my best year financially. But fortunately, I got savings. I'm not a spender, so I'm able to weather the storm.
Yeah.
And really, I learned this from last time. I tell people all the time. It's like I went dead broke the last recession. I lost everything. Talking about like. I lost my bills, and I lost my whole bank account. I didn't have anything after 2008. And so since then, I'm like, man, I'm not doing that twice. And so, I'm really adamant about saving, right now. And so, I'm thinking, and I'm still gonna be all right. That's why, I can afford to take off another month. And so I'll be all right. But like I said, it's all savings, man. I'm just not a spender. I mean, on anything, I just don't spend a lot of money. So it just works out. But so yeah, so then what I did
for all the people who are living under their means, this was a big help for them at this point in the pandemic. For everybody who was living above their means, they really felt it at this point. Because that's the problem. A lot of people spend more than they make. So when you come into something where you don't make any money for for a couple of months, that takes you out. Mess your credit up, everything. So it's important to make sure that you live under your means. if you can live, I mean, I know it's hard for a lot of people, so they're having a game right now.
Okay.
But if you can live, you know, at least 50% on 50% of your salary, I mean, I know it's hard for a lot of people, especially people who are making, you know, under 40,000, but it really helps you when these kind of unexpected tragedies happen.
Yeah, I think that many more people could do it than they think, you know, because you think you don't really have, but when you take inventory of what you're spending your money on, you'd be surprised on how much you could save. And then one of the things that I really kind of, I guess, understood that this pandemic helped me understand is about paying yourself first, because I never really kind of got that concept. But you know, the fact that you are supposed to create your nest egg first, like your bills don't get priority. I mean, obviously you got to be responsible, but they don't get priority over you building for tomorrow. So I think that's a really big takeaway.
Right.
Yeah, and also with that, you know, I typically tell people make sure that you don't just pay your savings first. You gotta pay your investment account first too, because
Right.
that's what's giving you the leverage. You know, that's what builds your nest egg. Because your savings, unfortunately, even in a high yield savings, the interest is very low. You know, so you have to have some savings, ready available cash, but having those investment accounts that, I mean, and again, disclosure, only if the risk is appropriate for you should you have an investment account. But if it does fit your situation, having those different pockets of money, even life insurance, having the cash value available to you, when these kind of things happen, you have multiple options on where you have money saved, right? And that will help you. And obviously, at the same time, you need to be saving enough that you're able to take care of your bills for at least 6 months. That's why your bill shouldn't be that high if you can't save 6 months of it. You understand? So that's when you start to think about what you're going to buy, how much your rent or your mortgage is going to be, how much your car note is going to be. You need to ask yourself, can you pay your mortgage twice every month, right? Because if you can't, it might not be a good idea to get a mortgage so high, right? Same thing with your car note. If your car note is a struggle, you need to get a car for a smaller amount. You know, we all want all of these. Say that again.
No, I said, or keep the car you had a little bit longer.
Or, however, whatever's
Yeah.
gonna make it be, you know, less.
Yeah, I'm a staunch believer in cash cars. You know, I mean, it doesn't make sense to take on a car note, and you never know what's going to happen. So this should have been a lesson to the people who were looking to go buy new cars. I mean, you know,
they can't afford it.
Right, exactly. You know, your job was there today and it's going tomorrow, and then you still got that car note due. So, yeah, cash cars. You know, they could be 3 years old, 4 years old. They work.
Yeah, now I ended up getting my first car payment. Like my last car, I was going to pay it. It was like $6,000, but I was going to pay it, but the payments ended up being like $150 a month. I was like, man, I'm gonna get this payment. So I ended up doing that, man, and you know, it worked out. It worked out for me. But no, that was the first year I ever financed. Other than that, I was definitely buying everything with cash. But you know, it's a little bit different now here in the snow with the baby and all that in the car. Like, nah, I'm gonna go ahead and get something with a payment on it.
Yeah.
You know, run around here. But so listen, now let me ask you this, Bakama. Now I just now opened up a solo 401k, right? So how do other people like me, right, determine, how do we know how much we can contribute to that 401k every year as self-employed?
So like, that's a really good question. That's like a whole calculation that whoever does the tax return, if you let them know, like, you need to know how much you can contribute, like it'll calculate it, because especially if you if you're married filing jointly, it takes into consideration your spouse's income as well. So it can get pretty complicated. It's not like an easy calculation that I can just go over like, off the top of the head. So that's something that you definitely want to communicate with your accountant. If you're self-employed and you want to know how much to put away, that's like a whole separate calculation that based on your taxable income for the year combined with your spouse. And it also takes into account if your spouse contributes money to their retirement plan and if they're employed or if they're self-employed. So it can get a little complicated.
Yes, that's got to figure it out. So, and now, do I do that? Do I have to do it by December to go on the 2020 taxes, or can I do it prior to when I file in April?
You can do it by the time you file the return. So I have clients that we finished their tax return in April and but we extend them specifically so that they can have the funds to contribute to their retirement account because they're self-employed. So self-employed individuals, the amount that you can contribute is significantly higher than like someone who's employed. So I think I would say it could be up to like 59,000, I think. I don't remember off the top of my head. I'm sorry, but it's significantly higher. So
I think it's close to that. I don't remember, but I think it's close to that.
Yeah, like so sometimes they don't have the funds for it come April 15th. So you can extend your return. Like you're required to make that contribution by the time you file your tax return. Because the thing is, it gives you an adjustment to your income. It can help lower your taxes. So that's why it has to be deposited by the time your return is filed. I hope that answers your question.
So I have a question then on that. So if you calculate that somebody has to pay a certain amount in taxes, but it will benefit them to put that in a retirement account, you can then make that determination at that point.
Yeah, so like as we do the return and we can ask them like, do you have anything set up? We notice that, you're self-employed and you made X, Y in income. You can actually contribute some into a retirement plan and it can give you X, Y, Z in tax savings. That's cool. So if you're self-employed and your accountant isn't, sharing that information with you, then hit me up. You might need a new accountant.
If they're not telling you about the set plan, then you need a new accountant.
Yeah, no, seriously, because that's something that it can be significant. I mean, $59,000 adjustment to income, like straight off the top. If you have the cash, of course, like that can definitely help you out tax wise.
No, absolutely. Because that could change your bracket, especially if you have other write-offs.
Right.
Man, listen, my tax bill.
I mean, did you guys hear about the new situation with Biden talking about 62% if you make more than $400,000? He's really playing himself with that.
Yeah, that's crazy,
New York
right?
City.
62% for New York City if you make $400,000 or more. Like that is like, why I gotta give up half of my income?
That's more than half, and so you might as well not even work.
You might as well make under that.
What we do know is this: the people that's making that much money, they have all types of write-offs.
All the tax write-offs, yeah.
They're never going to be close to that.
I don't care how much write-offs you got. That don't mean that you want to still get 62% of the rest of that income. That means if I make $1 million, technically I'm at like 400 and change, right? So even if I got $300,000 in write-offs, it's still messed up. Like that's crazy.
Because you're gonna have your life insurance policy is gonna be maxed out.
No, but you can't write that off. You can't write off life insurance.
You write it off?
No. It's tax free. No, it's tax free when you get it. You don't write life insurance.
Oh, okay. Well, either way, your retirement plan is gonna be maxed
but
out.
if you're contributing to it, then that doesn't add on to your income, right?
What?
If you're contributing to your life insurance policy, is that a deduction, or does it
No,
make your income less? No.
no, it's no deduction.
No.
Life insurance is absolutely not a write-off at all.
So can you hide
No,
money
it's
into
not.
your
It's like,
can you hide money in your life insurance policy?
But it's not hiding it because that's technically after tax dollars that you're paying for your life insurance policy with. You know,
So
so that has nothing to do with your income. If your income is 500,000, it's 500,000 whether your premium for life insurance is 50,000 a year or not. It don't have nothing to do with it. It's not a write-off. You can't write off the life insurance. Now you can try to swindle. I mean, let's not, inside all of your insurances for your properties, you can hide that one in there. But if you get audited and they see that, that's a
I
problem.
mean, even on the business side, there's some businesses that, insure key, officers, key executives. Like, that's not deductible. They always got to disclose that to us, and we reverse that expense when it comes to their tax return on the business side. That anything that has to do with life insurance is completely non-deductible.
Right.
So,
Right.
but
So
now,
don't add that to your deductions, which is 62%, because that ain't it.
hey, listen. So I was looking at like, I'm just learning this whole other world of making money through securities, and I'm like, damn, do I
Oh,
move?
and that's taxable too. Don't forget that. Don't forget to send them
The
statements
trading,
in there.
yeah.
That money you make for capital gains on those accounts. That
Oh
ain't free
yeah, I
money
know. That's
either.
what I'm saying. It's like, I might have to move to Texas or Washington or Florida, like somewhere with no state income,
Florida,
kind of balance it out.
Alaska.
Or is it Alaska? I know. I think it's Wyoming, Washington, Florida, Texas, and Alaska. Is that what it is? But yeah, they got no
I
state.
think Alaska is part of it.
Or if you
Yeah.
in
I thought about it too,
cryptocurrency,
but I forget.
from understanding cryptocurrency, you don't have to pay any capital gains on cryptocurrency in Puerto Rico.
That's interesting and random.
So you can hide all your money in crypto.
That's real random, right? Puerto Rico.
Yeah, like why?
That's where you gonna hide the Bitcoin at.
Yeah. You gotta get all your pay. You got to pay in Bitcoin.
PR account. Gotta get my PR account.
But no. Listen, the tax rate is gonna be outrageous. But New York has already been shared in population.
Just try to make under 400K, then we don't have to worry about it. You gonna have to just make less money, like just keep your money. It's ridiculous.
Yeah.
Going back to quit job to get lunch tickets.
What? You said quit and get lunch tickets?
Quitting your job just to get free lunch.
To be a
Oh
worker.
yeah.
Yeah, that does. I mean, a different level of it, but yeah, it's the same thing.
Hey, so what about child? Is child support deductible at all?
Is what?
No, I heard that's not deductible. Right?
It depends. I think you could agree for it to be a deductible.
I didn't hear it. What is it?
Child support.
He said it's child support deductible.
Nah.
No, alimony.
I don't
Alimony
think so.
used to be deductible, but not child support.
Okay.
Yeah.
That's why
But
people
no.
be mad with it when they take the money out their tax because they can't even write it off.
I
You can't even write that off.
I think the part you could agree to is the person who's receiving it. Is that the receiver? You could agree that it won't be taxable to the receiver.
No, you know why I think it's not taxable? Because the person receiving the money doesn't include that in their income.
Yeah, that's what I'm saying.
That's why
But
it's
they
not
had.
a
I thought you
write-off.
had to claim. I thought you had to claim income.
No, when you get the child support, you don't pay taxes on. I wouldn't pay taxes on my child support. So the person giving it to me has to pay taxes on it.
Mm-hmm.
Yeah,
Because
so
the same money, I'm not getting a break
Hold
for my money.
on. What comment we saying?
child support payments are not you. If you receive child support payment, you're not required to pick it up as income. If you pay child support, you are not allowed to take it as a deduction. Now, in 2017, a tax act was passed that limited alimony. Now, when it comes to alimony, if if the agreement was set before that tax law was passed, or I think it was maybe 18, but there's a specific date. I forget the date. But if you had an alimony agreement set before that specific date, you can deduct that. But then whoever receiving it has to pick it up as income. But anything like, I forget the date, but after that date, alimony is not picked in income, treated same thing as same way as child support. You're not required to pick it up in income, nor are you allowed a deduction for it. But when it comes to child support, that was never allowed.
Yeah, I don't remember seeing child support a tax return. I'm on it.
Man, no, I do know somebody who he was a CEO and he ended up quitting his job because he didn't want to pay the child support.
People do that. I've heard stories like that too, where they just like they refuse to like earn a income on the books just so they don't have to.
Yeah, no, listen, I think he was paying like 17. It's like 3 kids and like $1,700 a month, and he said he rather just.
I would quit my job.
But he just didn't want to do it. You know,
lunch tickets for everybody.
Yeah. So, but yeah, that's whole. I think, but New York is going to shed some more people, though. New York is, the New York and New Jersey and California, they're losing a lot of people, due to taxes. And Texas is growing. Florida is definitely growing, but really because of it, not having that state income tax. Now, hey, Jalil, down in Delaware, do you have state income tax?
And it's higher than Pennsylvania.
Oh, okay, but you don't have sales tax.
No.
Okay, I guess it balance out. And so I know in the Caymans, like one of my friends works in the Caymans, right? He regulates hedge funds, and what he says is that a lot of people from the U.S. they renounce their citizenship so that they don't have to pay the U.S. taxes, because the Caymans they don't tax income, they don't tax anything. There's no property tax, no income taxes.
So how do they make money?
They tax you on what you spend. So they have a high probably the sales tax is like 11-something%, but you don't get taxed on anything else except for what you consume. That's it. So if you're like me, a saver, man, your tax bill is gonna be super low.
That's
but
dope.
Like I said, there's no property taxes at all, no income taxes. And so, and what they try to do is get Canadian citizenship, because they, you get visas easy to come to the U.S. and go to the UK from the Caymans, but the Cayman citizenship is pretty easy to get back and forth. They just can't stay here in the U.S. for more than 6 months at a time. But they're making millions of dollars. They don't have to pay back to the U.S. So they giving the citizenship up. It'd be very hard for me to give up that blue passport. That's the best thing the U.S. got, the passport. That's 100%. That's the best thing the U.S. got. You can be anywhere with that U.S. passport.
True that.
but you gotta figure, right? If you're making, say $600, $700, $800 million, to have to give up even half of that. I don't know, the passport might not be worth $500,000 a year.
Nah, not at all.
No.
She's like, no, period.
So,
you can fly over the U.S. and just wave.
Yeah,
That's
You
it.
gotta come for 6 months and enjoy
right.
it. And then
Like, you can stay like 6 months maximum a year at a time. Like,
depending on where you are, you probably get tired of it within 6 months.
Definitely. But like I said, so they just, I guess the question is, do they ever come back, right? Do they have to get like some kind of work visa if they want to take another job off the island or elsewhere, come back to the U.S.? They have to get a work visa. That's the other thing. I wonder if you marry somebody, do you get the citizenship that way? I don't know.
What are you looking like you're ready to marry?
You renounce your citizenship and then marry somebody to get your citizenship back?
In case you wanted to come back into the U.S. I don't know how it works, man. But like I said, you make a lot of money. Yeah, if you're doing it for maybe like the first year, you might just go ahead and pay the taxes because you're not the job can work out. But once you got your foot in that door, but they said it's hard to renounce your citizenship. It's not like, you know, it's not like Prince Hakeem. Like, yeah, no, they said it's hard. Yo, Ev said it's cheaper to keep. We're talking about the child support. I don't know. Yeah, so they make it hard to get a citizenship. They know the U.S. They want that tax money. They're not trying to let you go. You know, but no property tax, no nothing. So, you know, it's that. But so no, we got a lot of good gems here. For comments, is there anything else that you think people might need to know or prepare that's different from this year, preparing tax versus last year?
What I want to say is, I guess, like, you know, as we approach the end of the year, especially before the holidays, or it depends on like what kind of business you're in. I don't know if the end of the year is more busy for you. That's when you earn the majority of your income. But it really is a good idea to try to talk to your accountant or whoever prepare your taxes, or even if you set up a consultation with someone who doesn't prepare your taxes. I don't know how you get your taxes done, but it's a good idea to try to talk to someone before the end of the year, because sometimes there's some tax planning strategies that you can put in place before 12/31 that can help you know, be prepared for whether it's a tax bill or not a tax bill. So like if you look at where you at right now, today is the 21st. If you know that you made like a lot of income this year, like COVID-19 hit everyone in a different way. So I don't know how everyone is. Like, thank God I was blessed. I worked throughout the whole year. Like if you know, like you have a lot, you can, you know, push some expenses into December that typically you would pay, you know, next year. Maybe you want to fast forward some expenses into 2020 instead of waiting to pay in. You want to on hand.
I love that
Fast
idea.
forward some income, investments in other places. Maybe you can fast forward some income into 2020 in order to offset the income with the loss that you have. There's different things that you can do. So I would recommend that if you can talk to a tax professional that can, like, even if it's for an hour, schedule some time to just go over where you at with your business so you can be prepared for what happens tax-wise in April.
So two more questions for you real quick. One, people that do need accounting, how can they reach you?
Two questions. Oh,
so if people
excuse
need
me. I mean, I can't
services,
hear you.
how can they help you? So how can
If
they reach
people
you?
need insurance,
If people need your services, how can they reach you?
oh, if you want to, you could send me an email. My name is long. Hold on. I'm trying to see the easiest ways to tell you. Oh, you know what? Send me a message on Instagram.
No, listen,
That's
put
the
it in
easy.
the chat.
Put it in the chat. Okay.
Type it in the chat. If you don't, I'll put it in the chat later. Your email is fine. So now, last thing I want to ask you before the
But also give your Instagram so people can reach out to you on there too.
Your Instagram.
You know what? It's not giving me an option to put it in the chat. Like I see comments, but it's not giving me an option to write it. So if Malik, you can add it in there, I don't mind. You could share my email and my Instagram as well.
Okay, now
I see a private chat.
Say your Instagram.
You say it.
Okay, so my Instagram is Kama Sabel. It's so unprofessional, y'all. I'm gonna fix it for next time. But for now, you can hit me up on. It's my personal one, KHAMASABELLE, Kama Sabel. That's my Instagram, and then my emails. Malik will share my email, but it's my first name my last name at gmail.com, and my last name is super long. So,
all right, now one last thing before we head out. So, how do people? You always hear that people can put their kids on their tax return or pay their kids to reduce the taxes. Is that possible?
What was that? What was that, Malik?
So it was a question. You always see people posting on Instagram that you can pay your children a salary to reduce your taxes. Is that true?
Yeah, so basically like because like you can take an expense for salary. Like if you have an employee, you take an expense for that. So I think the strategy behind that is, one, you can take an expense. So like, you know, if I know like I'm spending $10,000 on my kid anyway, right? So I pay my kid $10,000 as my employee. You can take that as an expense. I know kids are way more than $10,000, but that's just an example. And then the thing is, you also kind of like kickstart retirement options. You know, like you can open up an IRA and start saving retirement for your kid at an earlier age, instead of like typically, you know, people start saving for retirement after college graduation. So you're like, what, 21, 22 years old. But if you have a kid and you own a business and you decide to set them up as an employee, the contribution to Social Security starts at an earlier age. So then, you know, the payout is more once they're tired at whatever, if Social Security is still around, you know, that's like a whole thing. And then you can also like open up an IRA, some sort of retirement account for them, and start contributing early, because we know that, you know, I forget the term, but compound, you know, like interest. The more time the money, I'm sorry?
Compound interest.
There you go, compound interest. The earlier you start investing, the more money that, you know, that you'll earn. So that's like the strategy behind that.
That's a great gem. Thank you.
Is that at any age?
You know what? I'm not sure if it's at any age. I feel like I heard it can be any age.
No, not for the IRA.
No, we were talking about just paying the kids.
You're talking about employing the kids, or you talking about contributing to a retirement account?
Employing the kids.
I think that once they're working age, I think for them it's like 15 to 16 you can do it.
Let's see. Keena Kennedy said they have to be at least 7 years old.
I think it depends on your state. Okay. Because I believe in New York, they have to be able to have working papers before you can add them as an employee.
I think it also depends on what they're doing. Like you have to make it some sort of realistic, because like if you get audited, you may have an issue. You could correct me if I'm wrong.
Okay. Yeah, it does have to be a bona fide business expense. That is true. If you get audited, it could be a problem.
All right. So yeah, I'll just you know, I got the home office. Make my son clean the home office.
Do some shredding and stuff.
Yeah, exactly. Paying $10,000. Well, look, all right, everybody. You know, hopefully we answered, you know, some questions. I know I learned some stuff. You know, as I have every time we do this, I learn something. You know, to help me get a little wealthier. You know, and expand my wealth. I appreciate that. And once again, everybody, I thank you guys. You know, for being here and showing up. You know, and Lindsay, especially, you never home, but you figured out.
So I got my phone with me, so we still making it happen.
Yeah,
it's gonna be like a challenge. Like people gonna be like, "Where's Lindsay gonna be this week?"
Yeah.
So funny. I'll be trying to be home at 8 o'clock. That's rough.
You good, girl.
Run the street. Listen, go ahead. You know, go ahead, run the street. Yeah. But all right, everybody. Once again, I appreciate y'all. Thanks for tuning in.
All right, guys. Have a good night.
All right, good. All right, everybody have a good night. Okay.